Ladies and gentlemen, welcome to the Trusted Smart Chain Overview. My name is Travis Flaherty, and I'd like to welcome you to our presentation tonight. And thank you for giving us an opportunity to be able to share our vision with each and every one of you. I want to start off tonight with just a quick disclaimer. First and foremost, I'm a co-founder of ProsperLink, and ProsperLink holds the exclusive contract with the governing DAO for Trusted Smart Chain. Trusted Smart Chain is not owned by anybody. It is fully decentralized and it is governed by a legal charter. Now, the information that we're going to be sharing tonight is for education and information purposes only. We're going to be talking about trust nodes, which are software licenses that support the operations of the Trusted Smart Chain blockchain. Trust nodes are not classified as investments. We don't make any guarantees of income, profits, or financial returns of any kind. The analogy that I would give you is you can go and buy a Bitcoin miner on eBay and they'll ship you that hardware. You can activate it, you can connect to the Bitcoin network, and you can start earning Bitcoin for your support of the blockchain. Now, there's nobody over at Bitcoin that's going to guarantee you income or profits or financial returns of any kind. If you do so, you do so because you understand the Bitcoin tokenomics. You understand that unique fixed supply design has led to an asset that has outperformed every asset class on the planet. So with that, let's go ahead and jump right in. We built Trusted Smart Chain to bridge the gap between high valued assets and blockchain, to provide a universally accepted framework for the tokenization of real world assets. Now, for those of you that are newer to blockchain, let's start off by talking about the infrastructure, how cryptocurrency moves from one wallet to another. So, of course, in 2008, there was a collapse of our economy. It was caused by the banking system, and there was a lack of trust in centralized institutions. And so, of course, Bitcoin was introduced in 2009 as the first decentralized currency. Although it was first, the key innovation was actually blockchain, because blockchain is what makes it all possible. So the way that it works is, let's say that you wanted to send somebody some cryptocurrency, you'd pull out your digital wallet, you'd put in all of the details, including which crypto that you're going to be sending, how much you're going to be sending. And then from there, once you go ahead and click send, a block is created. And that block represents all of the details of the transaction. That block is then broadcasted to all of the nodes in the network. And those nodes work synergistically together to validate that transaction. Once it's validated, a block is now added onto the blockchain and the money moves from point A to point B. Now, a couple of key points here. If you look at number 4, you'll see a question mark in the middle. That would represent a centralized institution, the banks and the clearinghouses. In a decentralized system, they've been removed and replaced by the people, because the people now have an opportunity to be able to operate those nodes. In essence, it's run by the people for the people. And the second point that I want to make is without those nodes, blockchain wouldn't exist, and without blockchain, cryptocurrency wouldn't exist. Now, I want to talk about the one of the biggest conversations that's happening in the world of finance right now, which is the tokenization of real world assets. There is a massive shift that is happening in the financial system. Tokenization uses blockchain technology to break down physical or digital assets into smaller tradable units, which now makes ownership more accessible. It makes it more secure and more transparent. Think about the stock market. When you go buy a certificate of stock, you get a right of ownership in a company, or sometimes a right of distribution. Well, now what's happening is you can now go buy tokens that represent shares or ownership in a high valued asset. So you may not be in a position to be able to go buy a luxury hotel, but now you can go buy shares in that luxury hotel, or maybe it's artwork or existing businesses or commercial or residential property, just to name a few. We're seeing all kinds of things that are tokenized. BlackRock's talking about it. Fidelity is talking about it. JP Morgan is talking about it. The head of the SEC recently said that over the next 5 to 10 years, everything will be tokenized. It's now being compared to the internet only at the very beginning. And some are even saying that it'll be bigger than the internet itself. To give you some perspective of the growth trajectory, if we go back 5 years, we saw about 2.6 billion in assets that were tokenized in 2021. This last year, we saw approximately 500 billion in assets tokenized. And by the year 2030, it's projected that we'll see as much as anywhere from 16 trillion upwards to $100 trillion in real world assets that are tokenized. That is significant growth. To give you some perspective, The entire US national debt is only $40 trillion. Now, the reason why we're seeing this paradigm shift towards blockchain is because it's faster, it's cheaper, it's more efficient, and it's less risky for companies to utilize blockchain than, let's say, to go to the capital markets, even to take their company public. So going public costs on average about $5 million, and you're exposed to all kinds of risks, especially manipulation. You have companies like BlackRock and Hindenburg that are shorting your stock, and now it's estimated that as much as 85% of all shares that are sold through dark pools and naked shorting, along with bots and front loading that allow these institutions to legally manipulate the stock in their favor. On the other hand, if you went to blockchain to raise capital, you're not exposed to those same traditional risks, and it's about 1/20th of the cost. And so for those reasons, we're seeing this massive paradigm shift. But there are some challenges, and it comes from lack of regulation and lack of clarity. Over the last 5 years, we've seen significant opposition in the cryptocurrency space, and we've seen some major changes even over the last year with the new administration that came in. The government really failed to provide any laws that A, held these cryptocurrency companies accountable, and B, provided investor protection on the other side. The government really didn't have their arms around crypto. And of course, what they want more than anything is control. They want to know how much money that you're making, and they want to be able to tax you on every single penny. And 5 years ago, you could still circumvent the system. So, of course, they didn't want to give more clarity because that would have meant progress. And then, of course, you have the banks. The banks were fighting tooth and nail because they didn't want to see progress because they were seeing trillions of dollars leave the traditional banking system and going over to decentralization. And think about it. When we go make a deposit into the bank, what do you think that they do with your money? They invest it and they make a fortune on you, often at your expense. And I say that because while they're making money with your money, what's happening to the value of the dollar? It just keeps going down and down and down. And so, of course, they didn't want to see that money leave. And so they were fighting back as well. And so because of that, cryptocurrency was really attacked. I mean, there was a war against cryptocurrency. In fact, many of the companies were sued here in the United States, XRP, Binance, Coinbase, just to name a few. At one point, they were fighting over what was and what wasn't a security. They said that Bitcoin wasn't a security and the rest of these coins were securities. And so they started suing all kinds of companies for selling an unregistered security. We got caught up in that as well. I was a pioneer in the tokenization of real world assets space. I was with a company. I didn't own it, but I was operating nodes, supporting the infrastructure and helping them to build their network around the world. And they ended up getting sued also for selling an unregistered security. And sadly, I was pulled into that lawsuit as well. And, it was a very difficult time. False narratives were formed in the media. We ultimately ended up going and fighting the SEC and spent a year in court. And the end result was we actually won our case. The case was thrown out. The SEC was actually held in contempt of court and fined millions of dollars. The attorneys that brought the case forward were actually terminated, and they even closed down the regional office that brought the case forward against us. And so that was a really big case, and it received a lot of attention because at the time, everybody was calling for clarity, and what we got was enforcement. And so a few months later, Gary Gensler, the head of the SEC, ended up getting grilled on Capitol Hill by all kinds of congressmen and women about their abuse of power and their lack of clarity and their lack of framework. Eventually, we had the new head of the SEC step in, Paul Atkins. We had the new administration take over, and it's been remarkable what has happened since that time. We have seen so much progress. The first thing that they said was the war against crypto is over. We are now committed to making the United States the crypto capital of the world. And what's followed since then is been very exciting for those that are crypto enthusiasts. The first thing that they did is they came out in early 2025 and they clarified that both proof of work and proof of stake mining is not considered a security. Had we had that clarity 4 years prior, a large majority of those lawsuits would not have existed. In addition to that, we saw the Genius Act that was passed in the summer. ETFs, which were once labeled as never going to be approved. Crypto's never going to be integrated into the traditional banking system. All of a sudden was approved. They've now been integrated into your mutual funds. Cryptocurrencies being integrated into your 401ks. Even major banks that 3-4 years ago were telling you that crypto is a decentralized Ponzi scheme, are now telling you that you should hold anywhere from 4 to 5% of your overall total net worth in digital currency. So it's been pretty remarkable. Banks, executive orders were signed that now allow banks to be custodians over your cryptocurrency and even sell you cryptocurrency. Patents are being filed, infrastructures are being built, all for the next chapter, which is the tokenization of real world assets. What that represents is cryptocurrency growing up. The industry is moving away from the hype and the speculation, all these meme coins that had no intrinsic value, and it's moving towards compliance and regulation and tangibility. And that's a very exciting thing to see because now we're seeing more and more adoption taking place in this industry. So when we went through this period of time, my partners and I started asking some questions, some difficult questions. You know, in an industry that lacks regulation and clarity, how do you build something that people can trust? How do you progress the industry forward? And we ultimately said, how can we be part of the solution? And that's when we developed a universally accepted framework for tokenizing real world assets. What we're doing now is providing a pathway forward for businesses to tokenize their assets in a secure, regulated, and trusted environment. Number one, we're focusing on real existing businesses with cash flowing assets. We're not interested in speculative, unproven projects. And number two, we require all of those real world assets to be fully compliant, ensuring that they are registered as an investment, meeting SEC regulations. This means they have to go get independent audits up front. They have to have audits annually thereafter, and they have to have proper reporting on all things, including asset value, ownership, and transaction history. See, it's not enough to just say, hey, these coins are now backed by gold, or they're backed by billions of dollars in businesses, or they're backed by oil. If the real world asset is unwilling to go through a regulatory process that includes A, starting with an audit that verifies that the asset even exists, what a novel idea, and then B, establishing true value, and then going through a smart contract that binds the physical asset to an actual shareholder log, which now allows you to be able to go to the open market and buy shares in the form of digital tokens that give you actual ownership. If they're unwilling to go through that process, then at the end of the day, all we really have is clever marketing that is designed to get your dollars. That is what Trusted Smart Chain has built, and that is what Trusted Smart Chain is bringing to the table. I'm also very excited to announce that, to our knowledge, we are the first layer one blockchain in the entire world to implement these kind of standards. People ask me all the time, how are you guys different than Solana or Ethereum or some of the other blockchains that are out there? I want to play a 70-second video for you that will help you to understand our unique and meaningful purpose in the marketplace.
People often ask me, how is Trusted Smart Chain different than any other blockchain that's out there? You know, I was recently having a conversation with ChatGPT and I asked the question, how many blockchains are out there today? And it said over 1,000. And I said, okay, how many are true layer one blockchains? We're not talking about, you know, an extension of Litecoin or some type of a white labeled blockchain. And it came back and said 130. And then I asked, well, out of those 130, how many are fully operable? That means that their node network is active, their validators are online, they have the ability to be able to host a smart contract. And it said 30. And I thought, man, we are one of 30 layer one blockchains, which is pretty exciting. Then I asked the question, how many of those focus exclusively on real world assets? And it said 10. And then I asked the most important question. How many of those blockchains require every real world asset to file a registration A, register as an investment with the Security Exchange Commission, have independent audits up front, and annually thereafter? And it said 1, Trusted Smart Chain. You want to know how we're different? We're raising the bar in this industry.
What you have to understand is that the blockchains that came before us were built for a different era. They were built for the speculative era. If we all wanted to put together a coin and we came up with an idea today, we could actually have the white papers drawn up, have them done probably by midnight or first thing in the morning, and we could go to these blockchains and we could have it built on their blockchains with no problem within the next 24 hours. See, these blockchains don't care about regulation. They don't care about compliance. All they did is build infrastructure that had open source code that allowed anyone to be able to come and build on top of their platforms. What this new era needs, the next chapter, the tokenization of real world assets, is blockchains that are built with regulation and compliance in mind. And Trusted Smart Chain baked the actual regulation and compliance into the code itself, into the software, into the launchpad that requires these assets to be held accountable. Now, to be clear, this is not a capital raise. This is not an idea. Our blockchain is fully functional. It's live. We have written hundreds of thousands of blocks. Transactions are happening on our blockchain every single day. We have approximately 39,000 active nodes that are currently supporting the Trusted Smart Chain blockchain all over the globe. We have 12 real world assets. These are independent real world asset projects that are planning or preparing to launch on the Trusted Smart Chain blockchain as we speak. They are ranging across diverse sectors: real estate, medical grade hemp facilities, oil companies, luxury hotels, just to name a few. The average valuation of these companies, our sweet spot is approximately $50 million. Once again, these are companies that are established, they have assets, they have cash flow. We've also built one of the most esteemed blockchain communities in the world. We have thousands of members. It's called the Trusted Society. We recognize that there is a learning curve in the world of cryptocurrency. And sometimes it can be an expensive and painful learning curve. You go out and buy coins like Bitcoin and Ethereum and XRP and all of these different projects. And if you have a question, there's nobody to call, there's no support. And so Trusted Society is focused on giving our node operators access to the education that they need to build more confidence and overall competence in this space. Now, we had the genesis of of our blockchain back in March of last year, so we're coming up on our 1 year anniversary. We listed our token in the fall of last year. We've been trading in the $30 to $40 range on the T7X.io licensed digital asset trading platform. Right when we first kicked off, we launched our belief building initiative, which gives our node operators access to constant communication through weekly Zooms that we host multiple times a week, node update calls once a month, and events that are happening around the world. They get access to the founders, they get access to the development team, they get access to even the real world assets that are in process of tokenizing on the Trusted Smart Chain blockchain. Our goal is to tokenize 100 real world assets over the course of the first 3 years. Now, I will tell you, we believe that's a very conservative goal. In fact, we believe it's quite possible that we could have thousands of real world assets anywhere between the next 3 to 5 years. When you look at $16 trillion in businesses and real world assets that are looking to tokenize, and the fact that we are out front carrying the torch for a regulatory and compliant blockchain, it puts us in a very good position. We also launched our own self-custody wallet, which gives our node operators the ability to be able to manage their daily digital rewards. When you activate your node, what happens from there is every single day, you will now receive a distribution of Trusted Smart Chain, which will be deposited directly into your self-custody wallet. From there, you have the ability to be able to send those tokens directly to an exchange, to the T7X platform, and sell them, or you can safely hold them in your wallet. Now, as part of our Trust Us But Verify process, we encourage you to go to explorer.trustedsmartchain.com. This is the validation. Here you can literally see transactions happening in real time, blocks that are being created in real time. You can see what the current price is of the Trusted Smart Chain token at this very minute. You can see how many tokens have been minted. This is like having a magnifying glass that allows you to be able to look into the blockchain itself and validate it and be able to see the functionality in real time. In addition to that, we also hold a Certik audit, which is the gold standard for blockchain security. You know, in a world where you've got all these hyped up, speculative, unaudited launches, a Certik audit separates these projects that really have no merit whatsoever, that are centered and built around hype, as opposed to long-term infrastructure. And that's really what Certik represents. A very small percentage of the overall cryptocurrency blockchain industry holds such a standard. And to give you an idea of the company that we're in, Binance, Samsung, Crypto.com, Cardano, Ethereum, Apple, all hold a Certik audit. What they do is they come in and they look at your code, and they first look for vulnerabilities. They look for backdoors to see maybe if any developers have left any wormholes that allow them to come back in and hack at a later date. They also look under the hood to see if the code matches what you're telling the public. And so we're very proud of having that Certik audit because it differentiates us from a lot of the speculative projects that are out there. Now, I want to switch gears and I want to talk a little bit about the utility of the Trusted Smart Chain token here for just a moment. One of the most important things that I've learned about cryptocurrency is value in this industry is not a derivative of excitement, it is a byproduct of use. I'll say it a different way. Value is not a derivative of hype, it is a byproduct of functionality. And a lot of times, infrastructure projects aren't that exciting because they don't need the marketing. They don't need people going out there and making promises that it's this token's going to go to the moon or setting false expectations, because the infrastructure quietly is building a foundation that paves the way for the next generation of cryptocurrency. An example that I would give you is in Ethereum. In 2016, they came out, they introduced smart contracts, they built a layer one blockchain that paved the way for thousands of meme coins and NFTs to launch that were built on their infrastructure. They paved the way for the next chapter of cryptocurrency. They didn't need, hyped up celebrities or influencers that they paid to go out there to pitch the project, because the infrastructure was sound and solid and it had real world use. So I want to talk a little bit about the use of the Trusted Smart Chain token for a moment. Now, one of the ways that we bring real world assets onto the blockchain and the way that our Trusted Smart Chain token is being utilized is through our grant program. We actually take 25% of all of our node sales and we put it into a grant. When all is said and done, when we've sold out on our 200,000 nodes, that's hundreds of millions of dollars that go into a grant. Now, that if you're a technology company that focuses on real world assets, you can actually come and apply for a grant. And we have T7X as one of those grant recipients. They've actually received a $50 million grant. So far, we've satisfied $7 million of that grant to date. Now, what is that helping T7X to do? It's helping them to go out and bring real world assets onto their platform. T7X is a licensed digital platform, trading platform. It's no different than crypto.com, Coinbase, Kraken. They essentially are an exchange. The only difference is they're catering to a new demographic of investors that are coming into the industry that don't want to go gamble with meme coins. What they want is they want access to projects that have been validated, that have been registered as an investment. Why? Because they're being held accountable. They also want the ability now to be able to go and buy shares, tokens, giving them ownership in these high valued assets. And T7X is building a platform that makes all of that possible. So we are donating millions of dollars to T7X to go out and get these real world assets and bring them onto their platform. Why? Because Trusted Smart Chain is the infrastructure that makes it all possible. Trusted Smart Chain token is also the native token of choice for the T7X digital trading platform. The reason why Ethereum became the second most successful cryptocurrency project is because if you want to go buy any of those coins that are built on the Ethereum network, thousands of cryptocurrency coins, you have to go buy Ethereum first. Why? Because you have to pay your transaction fees with the Ethereum token. Essentially, Ethereum gives you access, and that's exactly what the Trusted Smart Chain token is doing on the T7X digital trading platform. Now, let's break it all down and let's look at how it all works. You've got T7X. They are essentially an exchange that is listing cryptocurrency coin tokens that are registered securities. To give you an example of a few, we've got the Tulum coin. Some of you that are on here tonight have been down in Tulum. You've met the billionaire that owns these particular properties. Tulum real estate is booming right now. He builds boutique hotels along the shorefront, and he's looking to expand his enterprise. So he is tokenizing. We have grow estate, medical grade hemp facilities across the United States and Canada. We have Whiteclaw Crude Oil and Gas Company. These are just a few of the real world assets that are currently in process of tokenizing. Now, all of this is made possible by the Trusted Smart Chain blockchain. All of these assets are tokenized into digital asset securities that live on the Trusted Smart Chain. So what is a blockchain again? It's nothing more than a network of nodes. Think of nodes as the blockchain's version of cell towers. They work together to validate transactions, maintain the network, and create a secure and resilient system. Now, I mentioned earlier, we are selling 200,000 nodes. When they're gone, they're gone. We've activated 39,000 of those nodes thus far. As a node operator, for your support and participation, you receive a daily distribution of Trusted Smart Chain token every single day. Now, Like I said earlier, you can take those tokens in your wallet, send them over to the T7X platform. Over the course of the next year, you'll see Trusted Smart Chain continue to expand onto other exchanges as well. You can sell those tokens, take that money, put it into your bank account, or you can hold on to those tokens. It's completely up to you. There's no requirements. You don't have to hold them for any period of time. It really depends on when you want to sell and what's the right price for you to sell at. Now, I will tell you, my personal belief system is this. I've operated nodes since 2016. I believe it's a more sophisticated way to get involved in cryptocurrency. I'd rather own nodes that distribute daily digital rewards in that blockchain's native token every day for the next 120 years rather than going and buying a token one time in the open market and hoping that I bought it at the right time. So for me, my strategy is very simple. I look for projects that are in the early stages. Why? Because there's less node operators online, which means the distribution is higher. And B, I go into every single project with no less than a 3 to 4 year mindset. Why? Because I understand that infrastructure takes time. Building utility takes time. And I like to be early so I can participate in what's called the accumulation phase. And I can continue to accumulate a large amount of those tokens. Why? Because I understand that with every real world asset group that comes onto the blockchain, the demand for the tokens that I'm holding only continues to grow. Very similar to Bitcoin. If you were fortunate enough to be supporting the Bitcoin network between 2009 and 2013, when their distribution was at its highest, and they didn't have very many people online that were supporting their network, and you accumulated all of those Bitcoin, well, in the beginning, it didn't really have a lot of use. There wasn't a lot of demand for it. Nobody even understood it. But over time, more and more people started buying it. The demand grew for it. The asset became more and more scarce, and Bitcoin ended up at $125,000 per coin at an all-time high. Now, let's talk a little bit about the token utility for a moment, because at the end of the day, this is what matters. This is what separates a hype-driven project as opposed to a true infrastructure utility token. When you have more and more utility, you have more and more demand. I want you to consider any asset class, doesn't matter what it is. We'll use real estate as an example. What happens when there are less and less homes on the market and more people are wanting to move and buy those homes? What happens to the value of those homes? The greatest benefactor of demand is value. So let's talk a little bit about where the utility comes from for the Trusted Smart Chain. Now, we've already talked about one significant utility that built the second most successful cryptocurrency project in the world, and that's the gas fees on the T7X digital trading platform. But let's talk a little bit about the RWA distributions and the RWA native currency reserve. So we require every real world asset to pay their investors their distributions with a Trusted Smart Chain token. So follow me on this. I'm a real world asset manager. I go and I get my audit. I file with the Security Exchange Commission. Once they approve me, I now have 12 months to open up what's called my capital raise. I'll partner with a media company and I will go advertise in 7 continents around the world. And during that period of time, I'm offering usually on average a 10% distribution. Now, if I'm a $50 million company, that's $5 million a year that I'm paying out essentially in dividends, distributions every single quarter to those investors. Now, I want you to do the math on this for a moment. If we have 100 real world assets, and I mentioned earlier, that's the minimum goal in 3 years, we believe we can have thousands on chain, but let's just say we have 100. And they're paying on average, and again, just hypothetically speaking here, $5 million a year. That's $500 million a year in annual demand for the Trusted Smart Chain token. Why? Because those fiat currency, the managers have to take their fiat currency. They have to go to the open market, to the exchange, and they have to buy Trusted Smart Chain token to pay their investors. That creates $1.4 million a day in actual buying pressure. Now, again, when we look at Bitcoin, think about Bitcoin's scenario. You have more and more people over time started buying it, right? Nobody paid attention to it. Then price started to go up a little bit. Then the media started paying attention to it, which meant more people started buying it, which meant the media gave it even more attention, which meant even more people started buying it. But remember, there's only a fixed supply and it's released a little bit at a time. It's not all 21 million token didn't come out at once. And so what happened is you have a growing demand and a diminishing supply. Whenever the asset is scarce and the demand grows, in Bitcoin's case, you ended up with an asset that again outperformed every asset class on the planet. So with each real world asset group that comes onto the trusted smart chain, the demand for the trusted smart chain grows. Now, we also require those real world assets to take anywhere from 2.5 to 10% of the capital that they raise and actually go buy trusted smart chain with it, and then they have to stake it. They're not allowed to touch it for 5 years. Why? Because we want to make sure that they have collateral to be able to pay their investors. But on the other side, what's that doing to the token that is in circulation? It's squeezing it, right? It's reducing the overall supply. Once again, what happened to Bitcoin when you have a growing demand and a diminishing supply? We've already talked about the gas fees on the T7X digital trading platform, and all of those tokens that are listed on the T7X platform are essentially paired to the Trusted Smart Chain token. This is what utility and use looks like. Now, let's pair that with the supply for a moment. We've talked a little bit about where the demand comes from, but what about that supply? Let's analyze Bitcoin for a moment. Bitcoin obviously is the most successful cryptocurrency project. Just to give you some perspective, over the last 5 years, Bitcoin is up 863%. In the last 5 years, gold is up 238%, and the dollar is down 21%. Think about that for a moment. Now, why is that? Two key reasons. First and foremost, Bitcoin, they came out in the beginning and said there's only going to be 21 million Bitcoin that are minted. This is defined by their white papers, and it is governed by a smart contract, which means it can never be deviated. It's not a promise, it's a function of the software. And it will continue to distribute based on the tokenomics that were defined in the early stages until it distributes all 21 million. Now, fun fact, we just crossed over 20 million Bitcoin minted this week. The final million Bitcoin will be distributed over the next 80 to 90 years. So what's happening is now it's becoming more and more scarce. So that programmed scarcity, that unique fixed supply design led to an asset, an appreciating asset that's outperformed everything else on the planet in the last 10 years. There isn't even another asset class that comes close to what Bitcoin has accomplished. Now, part of that was the way they distribute it. Every 4 years, they have what's called a halving event, which means that they cut in half the amount of token that are going to be released the next 4 years. And that continues every 4 years. Every 4 years, when there is a halving event, if you look at Bitcoin historically speaking, every time there was a halving, it hit a new all-time high. And then it starts to cool off about 1 to 2 years in. You'll see the market soften. We're about 2 years into the last halving right now. And then we start approaching the next halving, and then the markets start to warm up again. Now, that's what's happened historically up to this point. We looked at Bitcoin tokenomics. We looked at the tokenomics of a lot of different projects, and ultimately, we kept coming back to Bitcoin. And we said, why would we try to outmaster the master? So we did the exact same thing. We have a total supply of 21 million trusted smart chain tokens that will ever be minted. To date, we have minted approximately 2.4 million tokens so far in the first year. Now, we also have the same halving schedule. A lot of people don't realize this. Do you realize with Bitcoin, 10.5 of the 21 million Bitcoin were minted in the first 4 years? Think about it. If you were a visionary, a pioneer, you were there early, and you were helping support the Bitcoin network, they called it mining, and there wasn't that many people that even understood Bitcoin at the time, you were getting a large distribution of Bitcoin every day, because every day they were distributing 7,191 Bitcoin, 2.6 million a year for the first 4 years. That is called an accumulation phase. See, you could go buy a Bitcoin miner right now on eBay. They'll ship it to you. Now, you probably need access to cheaper power because it's difficult to compete on the Bitcoin network. There's millions of people that are on there that are fighting for 450 Bitcoin a day, but people still do it. You're going to spend about $9,000 or $10,000 for a decent Bitcoin miner that can really compete on the network. Here's the problem. You can't go back to 2009 to 2013 when distribution was at its highest. Where we are right now with Trusted Smart Chain is exactly where Bitcoin was in 2009 from a distribution standpoint. We only have 39,000 active nodes that are currently on our network, and we're only selling 200,000. We don't need millions of miners like the old Bitcoin blockchains. That blockchain is very antiquated. Those miners require a tremendous amount of electricity. They're not good for the environment today. newer blockchains utilize nodes, and nodes can simply be hosted in third-party service companies, data centers that'll charge you $1.95 a month. It's no different than hosting your website. And as long as you pay your $24 bill a year, your node stays active. So we have the exact same tokenomics as Bitcoin. Now, let's talk about becoming a node operator. So you earn rewards for your support and participation. I want everybody to hear me. This is not a passive investment. Number one, it's not an investment at all. You're buying software. Number two, it's not passive because you earn the rewards for your support and participation. So what does support mean? First of all, you've got to keep your node active. You've got to bring power to it. Once again, you can either do that yourself if you want to host it on your own server, or you can simply do what most people do and host it through a third-party company. They charge $1.95 a month. It's simple to set up. You pay your bill and it stays active. Your node is validating transactions on the blockchain. It's maintaining the security. It's adding blocks to the blockchain, supporting smart contract execution. It is helping to verify transactions, storing and ensuring all of the integrity of the blockchain data. That's what your node is doing. Now, in addition to that, when you become a node operator, you now become a member in the DAO and you get a vote. And votes come up from time to time, and that means that you are now able to participate in the governance of the blockchain. For your support and your participation, you now earn daily digital rewards. You also gain access to the Trusted Society, which is one of the most esteemed blockchain communities in the world. You get access to all of our social networking events. You get access to all of our regular Zooms that we host. You get access to our on-site visits. We held several events at the actual real-world asset sites last year, or we bring the real-world asset people, owners to our events. We had 9 events last year. We've already had 2 this year, one in Puerto Rico, one in Scottsdale. The next one's in Cabo San Lucas next week. And then the end of the month, on the 28th, we have a big 1-year anniversary summit, celebration, dinner gala in Las Vegas at the Red Rock Hotel, and you're all invited. So you get access to all of these things. And we have different levels of participation. Some of our members, they keep their nodes active. They read their emails to stay updated. They come to the once a month node update call. We have others that participate in our affiliate program. We're not network marketing. We're not direct sales. We don't want to be network marketing, but we do have a referral program, just like American Express or anybody else does. And I will tell you, we have people that are here that are making significant amounts of money just going out and telling others about this project. Why? Because once somebody else decides to become a node operator, all that does is strengthen decentralization. It adds more trust to the overall network, and it allows us to be able to attract more real-world assets on chain. Essentially, you get access to one of the most esteemed blockchain communities in the world. Now, nodes are currently priced at $4,000 a node. I say currently because every 1,000 nodes that sell, the price goes up $100. And that will continue until we hit $10,000 per node. So it's very possible you could come back in 6 months from now and nodes are priced twice what they are today. It's all about supply and demand. When you buy your node, you get you'll get an email that tells you how to download your wallet, activate your node. Once it's activated, you start receiving your daily digital rewards. You also now become a quote unquote stakeholder in the DAO with voting rights. And you also now are entitled to one distribution of the 7,191 tokens that go out every single day. Now, we have some people that operate more than one node. In fact, a large percentage of our node operators operate more than one node. So we have different statuses within our community. So prestige status is 5 nodes. To give you an example, if I had one node, and hypothetically speaking, for simplicity's sake, let's say that node was distributing 0.20 token per day. If I had one node, every 5 days, I'd have a full token. If I had 5 nodes, I'd get 1 full token every day. So you're earning more overall shares of the distribution. The distribution changes over time. Why? Because A, the 7,191 will stay the same, tokens that go out every day for the next 4 years until a halving, then it gets cut in half. And B, as more node operators come online, there's more people to divide those overall distributions up amongst. That's why being early makes a difference. Now we have different levels. We have legacy at 20 levels, 20 times the distribution. Luminary at 50 nodes, 50 times the distribution. We have our architects, 100 nodes, 100 times the distribution. You also get 100 votes. You get the correlating amount of votes with the amount of nodes that you operate up to 200. So Titan is 200 nodes. We cap it at 200 votes because we want to maintain decentralization. We've got hundreds of luminaries and Titans, And Sentinels at 500 nodes. Once again, even if you have 500 nodes, we're capped at 200 votes. And our top level, the most nodes that will sell one person, is Icon at 1,000 nodes. And again, the reason for that is because we want to maintain decentralization. We don't want a BlackRock or somebody to come in, buy up all the nodes, and essentially now they are in control of the community. So with that being said, I'll close with this thought. I am a big fan of infrastructure plays. I don't want to go participate in some coin that's built on some blockchain that lives or dies on that coin's ability to be able to deliver on its promises. I like to be the infrastructure that makes it all happen, especially when there is a massive paradigm shift that's happening in the world from a banking perspective, as well as cryptocurrency. Trusted Smart Chain represents the roads before the rush. If you think about it, every technology, every disruptive technology has two phases. They have the builders and the users. The builders are the Jeff Bezoses of the world, the Mark Zuckerbergs of the world. They build the infrastructure for all the other people that come along. In our case, the builders are the node operators for the Trusted Smart Chain. They earn Trusted Smart Chain token every single day for their support and participation. And the beautiful thing is, we're positioned perfectly in front of the rush as the banking system now begins to adopt cryptocurrency. The government continues to adopt cryptocurrency. The page is turned from hype and speculation to tokenization of real world assets. And that $16 trillion that's coming down the pipeline, they have to have a blockchain to build it. And just like Ethereum captured that era of speculation, we are planning on capturing that era of tokenizing real world assets. And all of those tokens that you're earning, they have to be purchased by the real world assets and the investors that are coming over to the T7X platform to participate in those ecosystems. So with that, I want to invite you to get back to the person that shared this presentation with you. They'll be able to answer any questions that you have. Please understand that the pricing can change depending on when you're watching this presentation. Every 1,000 nodes that sell, the price goes up $100. If it is before March 28th, I want to extend a very warm invitation for each and every one of you to come to Las Vegas, meet the founders, meet the team, meet the real world asset managers that are tokenizing on the blockchain so that you can really have an understanding of how big this is and even what you are potentially a part of. So with that, you guys have a wonderful evening. Take care and God bless.